Welcome back to Market on Close. I'm Marley Caden. Let's discuss the commodities market with Phil Streible, of Chief Market Strategist over at Blue Line Futures. Phil, it's great to have you with us. As always, I'm taking a look at Bitcoin right now. We did see them get right up to that another record earlier this week, now down about 117,000 right now, so falling quite a bit after touching another high. What's happening with Bitcoin? I know they're having some issues, likely issues with the inflation data that came in hotter than expected, but it feels more erratic than it has been in recent weeks.
It is, and as the price gets higher up in any commodity out there, the more volatility you're going to see in these markets. That's why every trader out there should have average true range on their cards, on their charts, not only on a daily, but whatever time frame they're using. But if you look at Bitcoin, it shot up through 125,000 and then it dropped back and it closed the gap on the chart. So if you look at the CME's chart, you're going to see that gap from last weekend where it closed on Friday. It reopens on Sunday nights. We had filled that. So the problem with Bitcoin really was the hot inflation data, the hot PPI data, and then the shift in expectations where you had this 6% chance that the Fed would cut 50 basis points. That flipped to a 6% chance that the Fed leaves rates unchanged. That not only hit Bitcoin, it hit the Russell, it hit anything interest rate sensitive like gold. And then you have Treasury Secretary Bessent. He revealed that Bitcoin purchases for the strategic reserve just wouldn't happen, that it's going to be more along the lines of confiscation. So that takes away some of that tailwind behind that market.
I was going to ask you about that. I was trying to figure out exactly what was driving some of this volatility. I did see that Scott Bessent said online that they were going to take Bitcoin forfeited to the federal government, and that was going to be put into that strategic Bitcoin reserve. So did that create some more uncertainty? That had been a positive bolster, at least for Bitcoin up to this point.
It really did. And it also caused people that are in the crypto space to go into safety. And the way they're seeing that safety is in Ethereum futures, which are grabbing headlines and really stealing the show. You've got numerous analysts coming out from $7,500 to $10,000 for year-end targets. It's an optimism fueled by the dominance here as that stable coin creation. It reinforces its position as the key role in the crypto sector. So it's the institutional adaptation that we're seeing where large financial institutions are swapping out Bitcoin and they're going for, Ethereum because of the fact that it's better with decentralized finance and its overall blockchain infrastructure.
It is so interesting to have watched just in the last couple weeks how much more we're talking about Ether on the whole. Before it was like a casual mention, maybe 1 in 4 times I was talking to you. And I feel like every time we speak now, it has to be mentioned. But as I look at Ether right now, Bitcoin down about 1% on the day, Ethereum down more than 3% right now. So, what's driving the harder downward move in Ether?
Well, it's the momentum traders coming into that market. A lot of people were chasing it, thinking that it was going to immediately go to some of those higher expectation levels. And the reality is that these are 12-month and year-end targets that were put out, and it's going to take some time. It's really the adaptation here. You're seeing a lot of different treasury type of companies that are coming in and acquiring it. And once it gets that kind of dominance, then you're going to start to see prices move back up. And you'll actually probably see even more volatility because of the way that the price works, that it's only about $4,500 per coin. So a $450 move is going to be a 10% move. This is why these are not actually cryptocurrencies. These are different types of commodities in a sense, because currencies don't move 10, 15% in a day. That's how things really become destabilized in countries. These are just different assets, digital assets to be said.
It's so interesting you bring that up. I've had other people say, be careful using the term currency. And I know we call them cryptocurrencies, but I always make sure I'm saying crypto because it really is a traded commodity as opposed to a currency in the way that we think about the dollar or the euro or any of the other currencies. And speaking of the dollar, I do want to talk about gold. We are seeing gold prices holding steady right now, actually, as I look at the charts. But, we are headed for a weekly loss. We have inflation data there. And are we flat right now and on a smaller loss and stalling out just because we're waiting for answers with the talks with Russia? Is that the primary driver here?
We'll see some geopolitical and market reactions. So the ongoing tensions with Ukraine that could influence some of the demand for gold. You also have Yeah, the real warning shot was when it broke through and it had no upside momentum when the talks of the sanctions with Switzerland with regards to the 1 ounce and 100-ounce gold bars, the market had pulled back from some of the speculators had left. And then you look at the reports on the CPI report, there was very little upside movement in the gold market, and it should have been just screaming higher. And you get that hotter PPI data, so you can start to get bond yields going back up. You get a stronger dollar, not necessarily today on the dollar, but yields were holding up, specifically the 10-year. The thing that I'm really watching is you go to total gold ETFs, they jumped to a 2-year high, and they've been consistently adding to the gold ETFs recently. And the same thing with silver. And if they do get this kind of peace discussion with Russia, or the Federal Reserve just cuts only 25 basis points and holds steady for a while because of rising inflation, you could continue to see an outflow in the gold market. So I think that your downside support is going to be closer to like 33.25. Your pivots to the upside, you got to recapture 3,500. You got to get over 34.25. That's been the recent high over the last couple of days.
And what is it going to take, Phil, to get us over that 34.25?
Well, the problem with the gold market right now is that, when the Federal Reserve, when they start cutting rates, there's a terminal rate, and that's generally when gold is going to stop its rise. And we just don't know where that terminal rate is. So it's going to take a lot longer for gold to for them to cut rates to get to this level. Gold futures are going to be swapped out for other favorable asset. I mean, you have U.S. equity futures right near all-time highs. You got significant volatility in the crypto space. So it's just gold is just, I'd just call it the fourth best in a horse race right now. It's not going to get you any money.
And while we're talking metals, I want to look at copper, because as I'm looking across the metals and how they're all trading today, I've got red on gold, red on silver, red on platinum, red on palladium, and copper is up 0.3% on the day. What's driving that? Because we've seen a great deal of volatility in copper, mostly tariff related, as it's concerned. But interesting to see one of them up on the day.
Yeah, we had this weaker economic data coming out of China overnight, and there was some speculation that they might come in and start to try and support their economy through some accommodative measures. Copper has been just completely whacked. It was down 22% when those tariffs were canceled. It tried to bounce one time, and it attracted some people coming in, some speculators, but that trade was quickly unwound by anybody who was just looking for any kind of relief rally to right size their position. So copper futures, technically, it does almost look like a bear flag, and that futures could break lower. The ultimate support level, I think, is $4 on copper. If you go below there, something is completely changed in that market. The reality is that copper demand is continuing to increase, copper supplies are decreasing, and the number of innovations that are utilizing copper are just continuing to grow. So prices will find their footing somewhere, but what kind of catalyst to get it to 540, wherever that recent all-time high was, I'm not sure at the moment.
Yeah, I know we're at 449 right now, so kind of right in the mid-range of where the danger zone is and where we want it to be. But let's just close it out with oil. Obviously, oil's down on the day as we await any sort of results from these conversations in Alaska. As far as the levels that you're watching in oil, I know we talk about it every time, but have they changed at all?
We could see some major downside risks, especially if there is a Russian deal. You get Russia back on the export market. They reduce some of the sanctions. They allow Russian oil to flow, and then the floodgates really open. OPEC, they could be stepping up their output. U.S. production's increasing. I just saw something about the first couple tankers of Venezuelan oil moving back to the United States. And then you go on the flip side, where if this deal falls through, you could see the U.S. additionally sanction more Russian oil, and that would really hurt them. So oil is bit teetering on edge right now. Same thing with U.S. equities. Same thing with the gold market, just following these geopolitical headlines. That's why I'm a little bit head on a swivel right now, because I'm getting every headline shot at to me of what's going on in this meeting.
Yeah, certainly as those headlines come in, I feel exactly the same, Phil. But, as far as the downside risk on oil, how far potentially, if we do see a deal struck, do you think that the price of a barrel could go?
Okay, so President Trump had indicated into the mid 50s to high 50s. So 58 to 55 would be kind of that landing point. It's got to be higher than a level where US shale producers can still at least operate and make some kind of income. So I think that that is above that $50 mark. So I'm really looking at between 58 and 55. I just don't see we had the most craziest geopolitical news between Israel, Iran, and the United States, and we barely got over $80. So I think you could just get rid of $100 oil altogether, $90 oil, even the $80, and you just find this area where we're going to probably trade in this range, unless you get some serious supply disruption. I think mid to high 70s is about as high as you get, and I really think that this mid to low 50s is about as low as you get.
Well, we appreciate it, Phil. Lots that we covered today in commodities. We appreciate your expertise. That's Phil Streible from Blue Line Futures. And coming up, we'll